What's going on, guys? My name is Derek Bathgate and I've been currency trading for around 3 to 4 years now. This video is my fourth episode of documenting me passing a further 50k evaluation from absolutely every trade I take, whether it's a win, loss, break even. And sadly, today's trade was a manual break even due to FOMC. If you don't know, FOMC is an extremely high volatile red folder news where price usually just spikes one direction, spikes in the other, takes you out for a loss. But the losses usually aren't just your 1% risk. The loss usually equates to 1.5 or even more due to slippage. So everything with this trade fit my criteria. Everything was absolutely perfect apart from that I had to manually close, and you'll see what happens after that. But anyways, I hope you guys enjoy the video and I will catch you in the charts. What I was expecting for this position was, as we had a break of structure, a sell side liquidity sweep, that was still our initial H4 leg. As you can see, everything in between is just sweeping. There's no real structure, no break of structure, putting in any new form of legs until we had this last liquidity sweep. This was the day prior to FOMC. So FOMC usually just ranges for 2 days prior, and the day before we had that liquidity sweep. After there, what I would need to see is a change of character to confirm the bullish switch, and my liquidity target was this high. The overall high was this one, and the reason I didn't take this high was because if we change character, there wouldn't be enough range to get even a 1 to 2. So the next area would be this high, because if this high goes, the next ones are more than likely going to follow as well. If we move down to the M15 time frame, as you can see, we have that sell side liquidity sweep and our M15 leg, which was this high to this low. Why? Because that is the most recent area that swept liquidity and fully broke structure after this wick. After this wick, we had a little rejection off of, then a full displacement candle lower where I took that as a break of structure. To see ourselves going bullish, we would have had to see this high go fully, which didn't occur to start off with as it just swept the high. But what we can still wait for is for the high to get taken with a candle closure to confirm the change of character. There you go, London open, we had that break of structure. During Asia, we printed the low of the day, broke that structure. So all we need to do is wait for a pullback down. And yes, you could also say we slightly swept the next swing high, which that would be a liquidity target if there was more range to target, but obviously there's not. What we did do is sweep it by 0.5, which isn't even a pip, which isn't even a valid liquidity sweep. So I took my fib, waited for the 50% retracement and entered once price came back down. My TP was up here, just above for a 2R, tagged in. Price really just consolidated for the next good few hours. I got tagged in at 9:30, I think it was 9:15, and we just consolidated. Before FOMC, it was around 4 o'clock here. I exited the trade manually, because if you trade FOMC, you're merely just gambling. You don't know exactly if price is going to go up, go down, as it's an extremely violent news. Price usually just targets liquidity with massive sweeps in each direction, so you don't know if you would just got swept out and then price continued higher. That is very possible. The best thing to do there is just close your trade, whether it looks like it's going to be a winner or a loser, just so you're not gambling. Even if you move your stop loss to break even, you are still likely to lose 1% or more than 1% due to slippage. If we watch the trade, FOMC started at 7 PM and we shot up to TP. We ended up taking out the next full on swing high, which is great because we have been stuck in a range for a long time. We are just putting in some lower price action without any commitment. And now, as we have broken this structure, what we can wait is for take that low, as that is our liquidity sweep low, to the high of the expansion out of the break of structure. That is our new current H4 leg. And now, since we've got some clarity on where we're trading, we can just expect a change of character and pull back within at some point. And there you go, there is some active liquidity for price to change character and target.